All right, let's talk about it. The big question I get all the time is the dream of striking it rich with Bitcoin mining totally dead? Or is there still a chance for the little guy to make it? Today, we're going to do a reality check for 2026 and find out the real answer. Let's dive in. So, you've probably seen the pictures, right? A tiny little box humming away in your home office, and it has the potential to earn you hundreds of thousands of dollars. It's the ultimate crypto dream. A small miner, a modest investment, and bam, a life-changing amount of money. I mean, it sounds incredible, almost too good to be true. So, is it? That's what we're here to figure out. And that's the prize we're talking about. 3.125 Bitcoin. Every time a block is solved, that's the reward. We're talking life-changing money here. But, and this is a big but, it really is like winning the lottery. The odds are just astronomical. And with more and more people jumping in, the competition is getting absolutely fierce. So let's ask it again. Is this dream even close to reality? Okay, before we get carried away with the dream, we need a serious reality check. So before you go out and buy a miner, you really need to understand something. The big leagues of Bitcoin mining, it's a tough business. We're going to look at the big picture here, and you'll see that even the biggest players are having a hard time. Yeah, this quote from the Miner Mag really says it all, doesn't it? The coldest profitability phase on record. And it's because of this perfect storm. You've got rising energy costs on one hand and insane network competition on the other. And think about it. If the massive operations, the ones with huge advantages, are struggling, what does that mean for someone trying to do this at home? And this chart, this shows you exactly why it's so tough. Let's talk about hash price. It's basically what you earn for the computing power your miner puts out. And look at that drop. It went from an average of $55 all the way down to $35. That means every single dollar you're spending on power is getting you way less Bitcoin back. Your profit margin, it's just disappearing before your eyes. It is a total dog-eat-dog world out there. I mean, look at this. The time it takes to just pay back your investment in new hardware, it's stretching out to over 3 years. You've got huge mining companies literally changing their business to do AI stuff instead, just to stay afloat. So the real question for you is, can you really compete with these guys? So a lot of people think the main cost is just buying the miner itself, but that's not even close to the full story. The sticker price, that's just the ticket to get in the door. The real cost, the thing that gets you, is what you have to pay day in and day out just to keep it running. And boom, this chart tells you everything you need to know. Electricity, it's not just part of the cost, it is the cost. We're talking 80% of everything you spend. It's the monster under the bed for miners. Seriously, just look at your own power bill. Now imagine it being 10, 20, or even 100 times higher. That's the reality we're talking about. Okay, so this brings us to probably the most important idea for any miner, your break-even price. It's super simple. It's the point where the money you make equals the money you spend. If you're above that line, you're making a profit, but if you're below it, well, you're actually paying for the privilege of losing money every single day. And right now, in 2026, that magic number, that break-even line, is around 7 cents per kilowatt hour. Now, to put that into perspective, the average American pays something like 13 cents for electricity at home. So you need to find power for nearly half the national average just to break even. This is your first piece of homework. Go find your last power bill and see what your rate actually is. And it's not just the power bill. These are the hidden costs that nobody talks about until it's too late. We're talking about upgrading your home's electrical panel, dealing with the crazy amount of heat these things put out, and oh my gosh, the noise. It's a constant loud hum 24/7. A friend of mine had to shell out an extra $2,000 just on wiring before he could even plug his miner in. These are the real everyday hassles you've got to be ready for. Okay, so you've heard all the warnings, you've checked your power bill, you think you might have an edge, and you're still thinking, I want in. Awesome, let's look at your options then. We're going to break down the 3 main ways you can get into mining so you can figure out which path makes the most sense for you. All right, take a look at this table. Think about what you're really trying to do here. Are you the kind of person who wants full control, max profit potential, and you don't mind the hard work? That's DIY at home. Or maybe you want a good middle ground. That's where hosted mining comes in. Honestly, for most people just starting out, I'd say look into a good hosting service first. It lets you test the waters without all the headaches. Okay, we've covered a lot. We've seen the incredible dream, and we've walked through the pretty harsh reality. So now it's time for the final verdict. Let's put it all together and answer the big question once and for all, is Bitcoin mining actually worth it in 2026? So after all this, the question really comes down to you. When you look at the complexity, the risks, the costs, is it worth it for you? This is a big decision and there's no single right answer. But I'm genuinely curious what you think. Drop a comment below and let me know. Is mining still a go or is it a no-go for you?
Okay, if you take away only one thing from his whole breakdown, let it be this. This is your personal profitability checklist. Number one, find your all-in power price. Is it under that 7 cent mark? Two, do you have modern, efficient hardware? Because old gear just won't cut it. Three, can your plan survive if it gets even harder to mine? And four, the big one, is it actually cheaper for you to mine a Bitcoin than to just go out and buy one? Seriously. Screenshot this, run these numbers before you spend a single penny.
I love this saying. If you need 3 miracles and a bull market to break even, buy BTC and keep your weekends. It just hits the nail on the head. If your whole plan depends on everything going perfectly, it's not really a plan. Now look, it's not impossible to make money mining, but you need a huge advantage, like access to dirt cheap power. For pretty much everyone else, the simpler, safer, and probably smarter move is just to buy Bitcoin directly. Hey, if this breakdown helped clear things up for you, do me a huge favor and hit that like button. And make sure you're subscribed to Crypto Explorer 24/7. We're building a pretty awesome community here, and we'd love for you to join us. Our next explainer is going to be all about the best altcoins to mine in 2026, so you definitely don't want to miss that one. Thanks for watching. Ever since they exploded onto the scene in early 2024, spot Bitcoin ETFs have totally changed the conversation for crypto investors. They promise this super easy, regulated way to get on the action, but it leaves us with one huge question. Are they actually a good investment? Let's dig in and find out. And when I say exploded, I mean it. In just over a year, a staggering $57 billion has flooded into US spot Bitcoin ETFs alone. This is not some niche little product anymore. This is a major, major force in global finance. So here's our game plan. First, we're going to look at the boom itself. Then, we'll stack up the ETF against holding Bitcoin directly. We'll get into how the big money is changing Bitcoin's behavior, check out the new data on risk, cover the dangers nobody talks about, and finally, help you make your own call. All right, let's kick things off with the boom. You have to understand, the approval of these ETFs wasn't just another boring product launch. No, this was a fundamental shift, a seismic event that changed how the world's biggest market gets to access and interact with Bitcoin. Now, you might think the US was first to the party, but that's not actually the case. Germany and Canada had spot products on the market years earlier. But let's be real, the US market is the heavyweight champion. So when the SEC approved 11 ETFs all at once in January 2024, that was the moment the floodgates really opened and legitimized this for the whole world. And of course, Hong Kong was quick to follow. So this brings every single potential investor to a crossroads. Do you buy the fund or do you buy the actual coin? And listen, this isn't just a technical question. It's almost a philosophical one. It really comes down to a core trade-off between convenience and control. And the trade-off is crystal clear when you see it laid out like this. With an ETF, you're basically buying convenience on easy mode. Security is handled by behemoths like BlackRock. You can tuck it right into your normal retirement account. Easy peasy. But you don't actually own the Bitcoin. Holding it directly, that gives you full sovereign ownership. You control the keys, you can even spend it. But security, that's 100% on you. So convenience or control? That's the choice. This quote from Robert Kiyosaki, the rich dad, poor dad guy, just hits the nail on the head. It perfectly captures the spirit of direct ownership. For so many of the OGs and crypto purists, the entire point of Bitcoin was to build an escape hatch from the traditional financial system. So for them, an ETF it kind of feels like a betrayal of that core principle of decentralization. Okay, so let's zoom out a bit. Forget the individual investor for a second and look at the whole market. This flood of institutional money isn't just pumping up the price. No, it's fundamentally changing the DNA of how Bitcoin behaves. So are we actually watching the end of an era right before our eyes? For the longest time, everyone in crypto lived by the halving cycle. It was this predictable 4-year rhythm that kicked off these wild boom and bust periods. Well, that old playbook, it's breaking. As some of the sharpest analysts have been pointing out, all this institutional capital is acting like a giant shock absorber, smoothing out those crazy swings and tying Bitcoin's fate much more closely to the big picture economy. And just look at who's buying in. Sure, the ETFs open the door for tons of retail investors, and they make up about 80% of the buyers. But don't sleep on that other 20%. That's the hedge funds, the family offices, that's the institutional money. This is the capital that couldn't easily get in before, and it's the real engine driving this new, more stable market.
Okay, so if the old cycles are broken, what does Bitcoin's new personality look like? Let's dive into the actual data and see how its risk and return profile has really shifted since the ETFs came along. And the numbers, they don't lie. The change is pretty dramatic. Research shows that since the ETF launch, Bitcoin's average daily return has gone up, while its daily volatility, those wild price swings, has actually gone down. So on average, it has statistically become a better asset, giving you higher returns for less risk. But here's the real twist in the story. You might think the ETF approval was the biggest thing that changed how Bitcoin moves at the stock market, but you'd be wrong. The research found something fascinating. A much bigger, much more permanent shift happened during major global shocks, especially the COVID-19 crisis back in early 2020. Just take a look at this chart. This shows the rolling correlation between Bitcoin and US stocks. See that massive spike right there in early 2020, just as the pandemic was hitting? That single event forged a stronger link between Bitcoin and traditional markets than the ETF approval ever did. And what that tells us is that Bitcoin is now a macro asset, plain and simple. It reacts to what's happening on the world stage. Okay, but it can't all be sunshine and roses, right? Of course not. The rise of these ETFs brings a whole new set of worries to the table, and regulators and skeptics are paying close attention. It's absolutely crucial that we look at the other side of the coin here. So a core criticism, one that's been around way before ETFs, is this whole debate over intrinsic value. Skeptics argue that Bitcoin isn't actually backed by anything real. They claim its price is just based on what they call the greater fool theory, which is this idea that you only make money because you're betting you can find a greater fool to buy it from you at a higher price down the road. And the ETFs themselves, yeah, they introduce a whole new flavor of risks. According to some deep analysis, there are three big ones. First, they create a perception distortion, basically making a super volatile asset seem all safe and cuddly just because it's wrapped up in an ETF. Second, they build a bridge for any chaos in crypto to spill over into traditional finance. And third, they might just be sucking capital away from productive parts of the economy and parking it in a non-productive asset. All right, we have covered a ton of ground. We've talked about the boom, the trade-offs, the huge market shifts, and the hidden risks. So now, let's put it all together and help you come to your own verdict as an investor. When you boil it all down, there are really two different paths to Bitcoin, each with a very different goal. Is your goal just convenience and getting exposure to the price through your regular brokerage account? Then the ETF path is probably for you. Or is your goal control and the core principle of decentralization? Do you value holding your own keys? Then going with direct ownership is your path. So let's circle back to the big question. Are Bitcoin ETFs a good investment? Well, the honest answer is it totally depends. It depends on your goals, on how much risk you're comfortable with, and on whether you're in this for the price or for the principle. There's no single right answer for everyone, only the answer that's right for you. Hey, if this breakdown helped you get some clarity, do us a huge favor and hit that like button, share it, and definitely subscribe to our channel, Crypto Explorer 24/7, for more deep dives just like this one. The choice you make isn't just about your portfolio. It's about the very future of Bitcoin itself. And that leaves us with one final massive question to chew on. With billions pouring in through these Wall Street products, is Bitcoin just becoming another traditional asset? Or can its original revolutionary purpose of decentralization actually survive this new era? Let us know what you think down in the comments. All right, so for what feels like forever, the crypto world has been talking about one thing, right? A spot Bitcoin ETF. And guess what? They're finally here. The wait is officially over. But with all this hype flying around, we've got to ask the big question. Should you actually jump in and buy one? Well, that's exactly what we're going to break down today. Okay, so let's get one thing crystal clear right from the get-go. Buying shares in one of these new Bitcoin ETFs, it is not the same as buying Bitcoin itself. Not even close. So to really get what's going on, we're going to do something a little different. We're diving straight into the source, the official legal paperwork, the prospectus, to see what you're really getting and, more importantly, what you're giving up. You might be wondering, why was everyone so hyped for an ETF anyway? I mean, you could always just buy Bitcoin, right? Well, it's because owning Bitcoin directly, it comes with some, let's say, intimidating challenges. It's not as simple as you might think.
And really, it all boils down to this one thing, your private key. Just think of it like the only key to a secret, unpickable safe. It's the only thing in the entire world that proves your Bitcoin is yours. It's the only way to get to it. So the bottom line is super simple. You control the key, you control the Bitcoin, period. And this is where things get really, really serious. We pulled this quote straight out of the fund's official documents. It says that if you lose that key, if it's stolen, if your hard drive dies, whatever, your Bitcoin is gone. And they don't mean call tech support gone. They mean it's gone forever. There's no password reset, no forgot my key button. It's just poof, gone. And that right there, that's the whole reason these ETFs were created. It's a choice. On one side, you can own Bitcoin directly, but that means all the security, all the responsibility is on you. On the other side, the ETF lets you hand all that scary stuff over to a professional company. You're basically swapping the headache of private keys and digital wallets for the comfort of your good old-fashioned brokerage account. Okay, so that's the problem. But how exactly does an ETF fix it? Well, the way it's set up is actually pretty clever and surprisingly simple. Here's how it works. First, a huge financial company, they call them the sponsor, sets up something called a trust. Then, that trust goes out and buys a ton of real Bitcoin. Then, and this is the most important part, they take all those private keys and give them to a super high security professional custodian. They lock them up in what's called cold storage, which just means it's totally disconnected from the internet. So after all that is done, you just log into your regular stock trading account and buy shares of that trust. See, you're not buying the Bitcoin, you're buying a piece of the company that's holding the Bitcoin for you. Now, obviously, all this convenience isn't free, right? The sponsor has to get paid for managing all this. They charge a yearly fee, kind of like a management fee. For this specific fund, it's 0.25% per year. Now, they are cutting that fee for a little while to get things started, but that's the price you're paying for someone else to handle all the hard stuff. It's the cost of simplicity. But listen, that fee, it's not the only price you pay. Not by a long shot. This is where things get complicated and where you absolutely have to pay attention to the details. The simplicity of an ETF comes with some major trade-offs. And check this out, another quote pulled directly from the prospectus. This is basically a giant warning sign. It's telling you, point blank, that the shares you buy in this ETF are nothing like the shares you'd buy in a regular company like Apple or Microsoft. It's a totally different ballgame. So, what are you actually giving up? A lot. For starters, you get 0 voting rights. None. You have no say in how things are run. And you know how sometimes the crypto network creates new free coins from things like forks or airdrops? Yeah? You don't get those. The sponsor does. The sponsor can literally change the rules of the game on you without even asking. And get this, the paperwork even says they might put their own interests ahead of yours. It really is the classic crypto saying in action. Not your keys, not your coins. And that whole fork thing is a perfect example of what we're talking about. Let's say the Bitcoin network splits into two, creating 2 different versions of Bitcoin. Well, the sponsor, and only the sponsor, gets to pick which one the fund will stick with. And that decision could completely change the value of your investment, and you have absolutely no power to do anything about it. Okay, this next point is absolutely crucial. Just because the ETF protects you from losing your keys, it does not protect you from the risks of Bitcoin itself. Let me say that again. You are still 100% exposed to all the wild, volatile, crazy stuff that makes Bitcoin, well, Bitcoin. So what are we talking about? Well, one of the big ones they mention is a hard fork. This is basically when the developers and miners can't agree on a software update, and the whole network just splits into 2 competing blockchains. An event like that can create total chaos and massive uncertainty for the value of your investment. And then you've got the real nightmare scenario, what's called a 51% attack. This is where some group or country gets control of over half of the entire Bitcoin network's computer power. If that happens, they could theoretically start messing with transactions, maybe even reverse them. Now, the documents are quick to say this has never actually happened on Bitcoin, but they also admit that some groups have gotten uncomfortably close to that 51% number. And believe me, the list just keeps going. You've got huge regulatory risk. Who knows what governments will decide to do? The special computers used for mining, they're mostly made by just a handful of companies. And the brilliant developers who actually maintain the code, most of them are volunteers. All of these are risks baked into Bitcoin. And when you buy the ETF, you're buying every single one of them. So that brings us all the way back to the beginning.
We've seen the problem they're supposed to solve, we've looked under the hood at how they work, and we've talked about the major trade-offs. So, are they worth it? At the end of the day, it all comes down to this one simple trade-off: convenience versus control. On one hand, you get easy, simple access and an account you already know how to use. On the other hand, you have the option to be your own bank with total control, but also total responsibility. Which one is right for you?
Look, there is no single right answer here. It's not a yes or no question. It really depends on what you're trying to achieve, how comfortable you are with the tech, and what you believe the whole point of Bitcoin is. The question isn't, are they worth it? The real question is the price of that convenience worth giving up all that control? And there you have it. That's our deep dive into the new spot Bitcoin ETFs. Hey, if this explainer helped you make sense of it all, do us a favor and hit that like button, share it with a friend, and of course, make sure you're subscribed to our channel Crypto Explorer 24/7 for more content just like this. Thanks so much for watching.